Today I'm going to share how I grew my dividend growth stock portfolio from $0 to over $500 a month in dividend income. I just hit a new milestone of over $6,000 in projected annual income, bringing my projected monthly income to $501. Everyone wants passive income, and dividend income is one of the best and most scalable options. Here you can own a portfolio of high-quality businesses that continue to grow over time. They pay you, the shareholder, a portion of their profits. As an example, I have one company paying me $2,300, one at $900, one at $700, one at $670, and these businesses continue to raise their dividend payments over time. As an example, this one here, over the past 5 years, has been averaging an annual increase of 11%. That's an 11% raise on your passive income. Many of us don't even get an 11% raise on our actively earned income from our job. And the reason why I love a dividend growth investing strategy is it's not all about the dividends right now. You're building a portfolio of assets that compound in value over time. As an example, my current dividend growth stock portfolio has a total value of $249,000. And over the past 5 years, I've put in $150,000 into this account. And I did this by taking my actively earned income and investing it for the future. And my return has actually been far greater than just the dividends I've gotten. So far, I have a total return of nearly $100,000 or about 65.8%. So with a dividend investing strategy, you not only benefit from growing passive income, but if you invest intelligently, then the value of the assets you own will continue to grow as well. In fact, there's actually a huge snowball effect in dividend investing when you reinvest your earned dividends. Since I started this account, I've earned over $18,000 in dividends, and I reinvested all of those to buy more shares in the stocks I own. That helps increase my future dividend income, adding to what we call the snowball effect. And all of this uses the power of compound interest to power massive returns over the long term. So today I'm going to share a little bit of the story of how I built this account, share all the stocks I bought this month that increased my dividend income by over $200, and do a few forecasts of how my portfolio's dividend income will grow over time. And if you stick around to the end of the video, I'll share a future value projection of how my dividend portfolio will grow over time, what will that future value be, and what kind of dividend income will it pay, even if I invest no new money in this account. And this highlights one of the main reasons why you need to start investing as soon as possible. You have to have time on your side to take advantage of the compounding effect. With that said, let's roll the intro and get into this portfolio update video. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I will be using the best stock research tool for dividend investors, which is available at dividenddata.com. I built this product myself, and it's one of my main income sources that has been powering the growth of my dividend portfolio. Building this tool has been one of my sources of actively earned income, which I then convert into assets which pay me passive income. And I've built tons of resources to help me find better dividend stocks and invest smarter. And I just put out a massive update to improve dividenddata.com, and it's one of the biggest updates we've had in a long time. So if you're a member, get excited. We just added to our stock analysis tool ETFs, mutual funds, and international stocks. And that increased our coverage from 8,000 to over 80,000 options to research. That's a 10x increase. So as an example, you can search for a stock, like as an example, SCHD, which is a popular dividend ETF, and then it loads this unique view to analyze ETFs. That includes things like dividends paid over the trailing 12 months, the expense ratio, which is always something you should be paying attention to with ETFs and mutual funds. That is a hidden cost with investing in these options, but SCHD, VU, and other options are very low expense ratio ETFs. And then you can see the NAV, the number of holdings, the assets under management, and of course a full view of the price history with the ETF. And then you can get a full look at their dividend with the forward-looking dividend and yield, plus the history of the dividend growth over 3, 5, and 10 years. and every single individual dividend payment. You can also get a look at all of the holdings in the ETF and the percent allocation in the fund. And you can also get a similar breakdown of diversification based on the sectors in the fund. And that's really just scratching the surface of what else we've added. There's now a global search bar available across all pages, and you can click on a ticker from any page to open the stock analysis page for that ticker. So here you can see the global search bar at the top. You click on it, and let's say we want to look at an international stock, let's say LVMH, which used to not be available on the system. And boom, you get the full stock analysis tool for LVMH. That includes histories for dividends, all the key metrics, financial statements, and earnings projections for future years. And to show off that click on any ticker feature, let's say, hey, you're at Microsoft in my portfolio, boom, you want to see more about it. What do you know? It opens up in the research page. And there's a ton more in the update. I'm not going to bore you with all of the details. I'll put a link to this little write-up I had so that you can see all the full information yourself. That will be in the description and pinned comment of the video. The last thing I'll leave you with is a little bit of a pro tip. I added these kind of tool features on the AI Analyst in the suggested prompts. So you can see these preset prompts to help you open some of the tools like the stock screener or the DCF calculator. And my main pro tip is that you should always favorite a stock screener page, because then you can open it up and scroll down and you can edit all of these fields that you would be screening by. And there's hundreds of different options. And that way you always have this stock screener at easy access for you to edit. So again, all that's available at dividenddata.com, and I have a lot more updates I'm excited to share with you in the coming months. I'm in a really good flow with improving the product, so get ready. With that said, let's dive into our portfolio update. And first, let me fill you in a little bit on my story and how I started this account. I've been dividend investing for a little over 5 years, and I started when I was in college. And the main way that I've been able to do this is to, of course, grow and earn actively earned income, and then live below your means, which entails keeping your costs low, and then investing a large chunk of that actively earned income. I've always been into business since I was in high school, had a pretty profitable venture I've talked about in the past in my senior year of high school. And then throughout college, I had some side projects and I had internships in software engineering and data science, and I invested the overwhelming majority of that income. I also started this YouTube channel you're watching in college, and a few years ago pivoted that and started developing dividenddata.com. So the thing you need to understand with dividend investing is that it's not a get-rich-quick scheme. It's a long-term strategy, and it only works if you also focus on improving your personal finance situation and your personal income. You have to have money to invest, and you have to keep your personal expenses low. And as the years go by, you start to build up some real momentum. And here you can see my current portfolio, $249K in value, 65% total return. And right now I have 10 stocks in this account. I've done full stock review videos on many of them in the past. This pays me $6,014 in annual dividends, which is $1,500 a quarter or $501 every month. And most of these dividends pay quarterly, so I have a 3-month rotation in the different amounts of dividends earned. So in August, I'm projected $483, September $401, and in October, $618. And if we go and look at my upcoming dividends earned, I actually have some big payouts coming in the next week. That is from 3 midstream oil and gas stocks, 2 of which I've been buying a lot of in recent months. And one's paying me $77, one's paying $179, and one's paying $226. And I'll talk more about those buys very soon. So here you can see more insights into the dividends of this account. My yield on cost is 3.52%, which actually is not that high compared to some high yield strategies you could focus on. But personally, me as an investor, I'm young, so I have much more of a total return approach while still building this base of growing dividend income. And actually, from reinvesting those dividends over these years, I've built up these dividend reinvestment shares or DRIP shares. And from that, my dividend yield on initial cost basis is now 4.01%. Just as an example here, you can see that the Altria Group, I've been reinvesting dividends for a long time with that one. So I have 114.7 shares just from reinvesting dividends. And that adds to my dividend income that I'm getting every year, helping me buy even more shares, which creates this virtuous cycle of reinvestment and growth. And my number 2 and number 3 dividend payers in my portfolio are actually new stocks I added in 2025. And this has really helped solidify my dividend income. And I think they'll be very high quality in terms of total return as well. These are high yield and high dividend growth stocks. Speaking of those buys, let's dive right into it. Since my last portfolio update at the beginning of July, I've been buying quite a few stocks. In fact, in total, I've invested $5,334 worth. That includes 33 shares of MPLX, which is a midstream oil and gas pipeline. I'll do a little bit of a dive into that, but I do have a full stock review video you should check out. This is at a cost per share of $50.54. and that was about $1.6 thousand. And that will increase my dividend income this year by $126. This is a high yield company with a current yield of 7.59%, and the dividend growth has been fantastic for MPLX. The 3-year compound annual growth rate is 10.7%, and their most recent dividend increase was 12.5%. So that combination of double-digit dividend growth with a 7.5% yield, that's rare. And the interesting thing is that in the latest quarter, MPLX actually gave outlook that they're expecting to support consistent increases of 12.5% for the next few years. And to be honest, that was so good, I almost didn't believe it. So I had a pretty long drive recently. I was going to the beach, and I used this company Earnings Hub, which has a great earnings calendar. It's for free on your phone and on the website. And you can listen to earnings calls on it. So I listened to 3 earnings calls, and what do you know is the 3 stocks I was buying recently: HESM, MPLX, and TPL. I'll talk a little bit about all those. And to be honest, it was a great experience. If you want to listen to earnings calls on the go, I recommend downloading that Earnings Hub app. We also have them on the sidebar of dividenddata.com. They're our official earnings partner. The link is in the description and pinned comment of the video. But on that call, they verified these 12.5% increases for the next few years. And if they can do that, my dividend income for MPLX is going to explode from here. Because not only am I reinvesting at that 7.5% yield, but that income is inherently growing itself. My second buy is Texas Pacific Land Corporation, ticker symbol TPL. This is one of my lowest stocks in the portfolio. It's a low yield company as well. But in my opinion, it's an extremely high quality business I wish I had on my radar back in 2020. And now I got my eye lasered in on this thing, and I'm just hoping for some buying opportunities. And right now, I think we're at a pretty interesting one. It's definitely not dirt cheap by any means, but it's cheaper than it has been over the past 3 years. So I bought 3 shares at a cost per share of $913.68. That's $2.7 thousand in total cost. And that'll pay me $19.20 in dividend income. And this is now the second lowest stock in my portfolio by total value, and they're down quite a bit from their all-time high in stock price. If you don't know this company, I'll be doing a full stock review soon, but basically they own a ton of land in the Permian Basin in Texas, and they have oil and gas royalties for the land they own, and they also have a water royalty business as well that's been growing pretty well. So what this means is this company has insane margins in the energy sector, 89% gross margins, 64% net margins. It's a pretty beautiful business. They just rake in cash, and they have very low capital expenditures and no debt. They have negative $540 million in net debt. And they actually do have a growing dividend payment. They have this base quarterly dividend that they grow pretty well. Their most recent increase was 36% on that base quarterly dividend. But then they also have these large special dividends that they issue every few years. And what I'm most impressed with the recent earnings at TPL is that they're at near all-time highs in earnings per share, despite oil prices being down significantly. And that's because they're doing so much more volume. Over the past 10 years, they've put a core focus on basically recruiting more and more companies to drill on their land, and they make it as easy as possible, which is a big reason why they've been investing so much in water, because that helps attract some of these drillers in the region. And despite crude oil prices being down around 40% from their 2022 highs, TPL has been growing their earnings. And I'd expect the next time we're in a boom cycle, the stock is going to roar. And my longtime viewers know how I play these commodity-sensitive stocks. I like to buy them when they're in a bear market for the commodity. And that's why I wish I was following this company in 2020 when the oil price even dipped negative briefly, because that was the clear time you should have been buying. I just didn't even know this stock existed. But that's enough of that. I'll talk about it more in my full stock review, probably in the next few weeks. My third buy is a company I've been talking about a lot, which is HESM. That's Hess Midstream. I bought 24 more shares at a cost per share of $38.55. That's a little under $1,000 total cost, and that will add $70 to my annual dividend income. This is now my third largest dividend payer at $719 in annual income, and it has a 7.80% dividend yield. And what I love about this stock is that they raise their dividend payment every single quarter. In fact, their most recent dividend increase was 3.83%. Another nice thing about this one is it's a midstream oil and gas stock and a limited partnership that doesn't get taxed like a limited partnership. So you don't have a K-1 form with this stock. It has a very weird corporate structure where there's actually a public entity that you're investing in, and the dividends are just normal under 1099 div. And again, this is a nice combination of high yield and high dividend growth. 5-year dividend CAGR is 11% with this company. And I'm hoping to build this up into one of the core positions of my dividend growth portfolio. If you want to learn more, I did a full stock review a few months back. I'll link all of these in the description of the video and on the end screen. Now you might say, okay, Zach, that's great, but what is this dividend income going to look like in the future? So I'm going to give you a few projections of how it would grow, even if I add no new money to this account. The first one will be from Dividend Growth alone. So I downloaded this from dividenddata.com, my portfolio, and then I took my dividend growth rates for each of the stocks, and I projected the annual dividend for them over time. So here you can see how they would grow by year 10 just from dividend growth alone. This is not including reinvesting dividends. It's not including adding any new money. So 10 years from now, this would be paying me $11,700 in dividend income if I don't reinvest my dividends and if I add no new money to this account. That's just from dividend growth. Well, let's factor in just reinvesting dividends and let's forecast it over an even longer time. To do that, I kind of needed to know the dividend growth rate of my whole portfolio. So I did a little calculation here for the weighted average dividend growth rate, and that put my overall portfolio at 8.98%. So I used this dividend snowball calculator I have on dividenddata.com. Link will be in the description and pinned comment. And I pretended that my portfolio is basically a stock. So I have my current portfolio value, the current annual dividend, the dividend growth rate of my overall portfolio, and an expected stock price annual growth rate. I just kept it at kind of what the S&P 500 does. And then let's say I just buy one share and I reinvest my dividends and I don't add any new money. Let's calculate to see how that grows. Well, first we can just see the massive impact of reinvesting your earned dividends over the long term. As you can see, over 35 years, the difference in total portfolio value, that would be $8 million versus $15 million. So that's nearly a 2 times difference. And 35 years from now, if I added no new money to this account and I just reinvested dividends and it hits those benchmark returns that I have above, this portfolio value would be $15.1 million with over $200,000 in annual dividend income. And this really shows the impact that time has. You have to let your investments compound, and the truly crazy impacts of that only happen in the later years. But still, we're hitting $15,800 of dividend income in year 10 with a portfolio value of $828,000, $1.5 million by year 15, and over $26K in annual dividends, $2.6 million in year 20, and over $44K of annual dividends. And the growth only accelerates the longer you let it compound. And I'm not just letting it sit. I'm constantly taking my actively earned income and turning it into an ownership stake in these dividend stocks. And some of these are the highest quality businesses in the world, whether it's Microsoft, Alphabet, Visa, as well as some high cash flow energy stocks like ExxonMobil, MPLX, Hess Midstream, etc. So as I end this video, the main thing is really just to get started. You don't have to pile in and research individual stocks. You could start with simple ETF-based approaches, but really the key is just to get started because that will also accelerate your learning. So with that said, thank you for watching this monthly portfolio update. If you enjoyed it, please leave a like, comment, and subscribe to the channel, and I'll see you in the next video. Oh, and if you're a dividenddata.com member, try out that new update. Let me know your feedback, and I'll see you soon.